What's going on, guys? Welcome back to the channel. In today's video, I'm going to go over the trades that we took on Friday as well as the game plan going into this week. So I've been uploading a little bit. I had to get my wisdom teeth out last week, so there wasn't any videos really for last week or second half of the week. Forget when the last video I uploaded was, but we're back and I'm going to give you guys what I'm thinking for this week when it comes to trading. So last week it was still neutral. Market never flipped to trending on either side. So you can see on Friday, we almost flipped bullish here towards the close, and then this 50 SMA just kind of sloped down off of the open into the next day. So market's still neutral. So what does that mean? Just looking for a 0 DT cross on either side of the premium. So if we go here on the 0 DT charts now, 5-minute, obviously there was really no opportunity on the call side to take any longs. You could see we did have this little negative cross here, which honestly you could have entered some short right at this 50 SMA. That would have been your best opportunity to short. I did have kind of a bearish bias going into the day, just because if we pull up the Friday contracts, you can see on like all the time frames we ended up rejecting very key resistance points. And then if you go to the 4-hour here, this chart is going negative. So 4-hour time frame crossing negative, high time frame crossing negative. That means likely this is gonna cause some sort of move down, which we really never got. There was really no big drop that happened on Friday, so it wouldn't surprise me if we did drop a little bit going into Monday. Well, let's see how we open up. But yeah, we also rejected that daily 10. It's not too significant, but yeah, that 4-hour chart was the main thesis on why it kind of did favor us going lower. There was only one opportunity, well, I guess two opportunities. You could have taken that negative cross on the call side or wait for the put cross. If you wait for the put cross, you would have taken a loss, and I actually ended up taking a loss. I went a little bit safer on this, so I grabbed puts for Monday instead of going on the 0 DT chart or going on 0-day contracts or going on futures, just because we've been chopping around and there just hasn't been good action. So again, I'm not gonna force going heavy when I know that action hasn't been the greatest. And we got this little cross right here, and then this 50 SMA was in between curling up and pointing down a million times. So we got this initial cross. It gave a solid move from this initial curl. It probably curled on this candle right here, and I gave an initial move, but I was looking for more, and I just ended up holding my puts until we lost the 50. I actually waited for this chart to go negative before closing my position, so I didn't stop out right here. I still favored us going lower, and then when we came back up, got above the 10, but again, 10 SMA is down super hard, so it wasn't looking the best. And then once we got back below here again, that's when I got out, because I'm like, okay, we're just chopping around, market's not going to move most likely. So yeah, exited the puts. Really wasn't that much of a loss because I had Monday's expiration and I went closer in the money. So I was really limiting the risk on that, just because market's been chopping. Market just hasn't been going in our favor because we're neutral. So until we get that trend flip, action might not be the cleanest. And I really haven't been trading SPY that much, or futures when it comes to the market, because there's been no trend. No trend means I'm not really that interested in trading that much. And if there's a setup that happens like on Friday where it's okay, the 4-hour chart is in our favor, and then puts are crossing, yeah, I'm gonna take a chance and take that trade. But again, I'm not sizing anything crazy. I've been sizing more on options. I mean, there's been so many good option setups. Swinging really hasn't been easier in my opinion when it comes to the new variation of the system. It's a great way of trading. I'm gonna go over some setups that we did take and I'm looking at into this week. But yeah, that's pretty much what we did on Friday. There was really nothing much going on in terms of SPY on Friday. I think there definitely was maybe a good opportunity one of the days last week that I didn't make a video on, but I didn't take anything when it comes to SPY last week. It was all pretty much option trading on individual stocks. But yeah, game plan again, tomorrow we're neutral. You guys know that because the 30-minute. We're going below the 50 here on the calls. Same thing on the puts. We're neutral. So if anything, I think we'll get a put cross going into next week. That's probably what I'm gonna be looking for. And if we don't get it, obviously I will take a call cross because we are neutral. So yeah, open crosses on both sides, but more so favoring the downside. I like overall in the market though, I am still bullish. If we pull up the July 18th contracts, or I mean the August contracts real quick, if I could find them. Is it these ones or these the August? Yeah, these are probably gonna change, but for now, you can see like what the higher time frame trend is like. I mean, this is why these contracts are pretty important. You could see every major bottom we had was at this 50 SMA. And ever since then, we've been trending up. We've been chopping a little bit up in here because we have been neutral. So, this entire way up, we were trending bullish, and then we eventually broke that 30-minute 50 somewhere in this area, and we've been chopping. So, as long as this chart is crossed on the higher time frames and we hold the 50, I'm, like higher time frame, we are bullish, but I'm not taking any trades off of this chart right now. So, yeah, if we come down, if we get any sort of dip to this 50, most likely it will be a good opportunity to buy some longs. You don't have to. It really depends on your style of trading. I mean, if we come down on this 50, you could buy calls for like a month out, go safe, and if we get a daily close below that 50, you stop out. And like the risk to reward on these trades are super, super high. I mean, you could see like, a closure below of 50. I mean, sure, maybe you'll lose like 30% at most, or maybe even 50% if it's a massive down day. But look at the upside potential. These contracts went, let's say you got filled at 280. You didn't get the best fill. 280 all the way up to 1156. I mean, that's a crazy run. Trim on the way up, and yeah, I mean, that's the thing with these like swings. Like I'm looking for a multi-day run because you can see what happens when we get this daily chart to cross. And you could just get really fat percentage swings out of this when it comes to options. So higher time frame picture, we're bullish on SPY, but if we did get a dip to this 50, it wouldn't surprise me. That might actually line up with the 30-minute 50 on the put side, which then if that was the case, that would be a very good opportunity to actually grab some longs if we got a dip to this 50. If that was the case and it aligned up with a 30-minute 50 on the put side. But yeah, neutral day going into tomorrow. That's just the higher time frame outlook on SPY. That's what these monthly contracts are used for, just to gauge like the actual like super higher time frame trend. And that's why we had the monthly contracts on the watch list now. So yeah, that's it for SPY. Some individual stocks. What do we have here first? Nike. I've been in this one for a minute. I think I'm down like 10% maybe right now, but pretty simple. We crossed on the daily chart. We've been seeing a pullback here to this 50. I don't love the look of it at the moment just because you could see how hard this 10 SMA is pointing down. So there is a chance we do lose the 50. Again, I'm sticking to the plan. Daily closure under this 50 SMA is my stop loss. So as long as we hold the 50, I'm holding this. I don't love the look, but again, I'm sticking to my plan. And if we close below the 50, that's when I exit. And then if we bounce off this daily 50 and we rip, that's great. I just like the risk to reward on the setup. Again, it's kind of just like going back to that daily chart and SPY. We pull back to the 50. As long as we hold it, I'm bullish, and that's the same case for Nike right now. So I have some August contracts. When I'm playing this 50 dip on the monthly contracts, I'm buying at least a month out. Just because it could take some time. You can see what happened here. We pulled back. We got 1 day, 2 days, 3 days, 4 days, 5 days of us just sitting at this 50. So, I want to have that time on my hands when, we are buying these dips to the 50. And, I play the shorter expiration once we have that confirmation that, we're going bullish on the shorter time frame. So that's where we use the weeklies, and, we use that nearest Friday expiration on the 30-minute to gauge that weekly trend. So once that trend flips, that's when I grab some shorter expiration. That's a great way to have two positions going on this type of way of trading, because you buy the 50 dip here on higher time frames, then once you get that shorter time frame confirmation, then that's where I add the shorter term expiration. Or you don't have to do both. You could do one or the other. If you just want to buy the if you're not on the charts that much and you're busy, just focus on these daily 50 SMA bounces. Buy your month or two out contracts, let it play out, and if we get a daily close under the 50, you sell it and stop out, or you wait until you're up like 70-80% or even 100% for a first trim, and then let stop loss go even and then trim along the way. That's kind of how I like to trade these charts. I'm not selling anything less than 60%. If I bare minimum, I'm looking for 60, but really 70, 80, even 100% before I'm trimming anything. So when we get these daily charts crossed, we get that multi-day run most of the time, and why would I sell early? Like, even if I'm up 70-80%, sure, like take a trim maybe, but I know that when we're crossed on this chart, we could get some really good trends. So, I'm not going to sell everything on that initial bounce when I'm up like a good amount. But I'll go over exactly, like this happened to me on CVX. I was up a good amount off of open if I could find it. Yeah, I was up a good amount off open on Friday. I didn't call this out, neither Nike, but yeah, we pulled back to this 50. About the 50 dip, but we've got a good bounce here, over 100% on these contracts. I was up like 70 to 80%. I had some drawdown to begin with, but yeah, like we didn't get that multi-day run yet, so I'm not selling. Like, this candle is all the way up here. I'm expecting it to go even higher because we're crossed on the daily chart, and usually we get like a multi-day run off of these contracts when we get this daily cross. So that's what I'm looking for on CVX. I mean, it's a good looking chart. We had a massive wick on Friday, and we got a big bounce in the close. So again, this kind of depends on what contracts we get. These 160s don't look the best. We did hold the 50 though. So again, like that was my thing. On Friday, we were all the way down here, but I said as long as we hold the 50, or until we close below the 50, I'm going to hold this. And, I didn't stop out because it wasn't the end of the day yet. We had a few hours left, and look at the bounce he's got in the close. I didn't have these exact contracts. Actually, I think I did. No, did I have these contracts? There's no way. Low 0.47. I don't even know. I forget what contracts I have, but I think I'm down 30% on these right now. I was down like 50%, but again, sticking to the plan. Most of these trades are going to run at least 100% on these moves, so it's like I'm willing to risk that like 50% if I needed to. Like if we close all the way down here, okay, I'll close it because then it's invalidated. But yeah, like on these trades, you're gonna have a wider stop, and if you can't handle that like drawdown, then just go like lighter size. Like it's all about sizing. If you're worried about a trade, you're sized too much. So yeah, that's kind of how I'm playing these daily charts. I have CVX, I have Nike for August, and then like I said, once we get that 30-minute to cross on the Friday contracts, that's when you add, like that's why I'm going to add the nearest Friday expiration. That's where you can catch some really strong moves. But if you're just looking to swing, then go with you could buy these like monthly contracts. But yeah, I like CVX, I like Nike. If we could somehow get a 30-minute cross on the calls this week, that would be a picture perfect setup to take. Another one is Palantir. If we go to the daily here, actually this is not the right ones, but again, so just the daily chart is crossing right now on Palantir, and then we just need this chart to cross again on the 30-minute, and then I'll grab some longs because like even though the other contracts are bullish right now on the daily, like I'm not just going to add it because we're at like a pretty key spot right here, the 50 SMA. So we're either going to reject here and dump a decent amount, or it's going to go and cross back up. Like I'd rather just wait for it to cross back up at this point because we're at a key pivot. Might as well just wait for the confirmation. If we get the confirmation, I'm going to grab some Palantir. It's a good looking setup. I swear I had this on the contracts. Yeah, here it is. Okay. So if we go to the daily here, we're just starting to cross on the daily chart. Doesn't mean it can't pull back because we did just cross negative on the 30-minute. So, at this point, even though the daily's crossing, I'm just going to wait for that confirmation on the 30-minute on the weeklies to take an entry point. So Palantir, it's a good looking setup. I mean, you can see what happened previously when we got this cross. Hit the 50, bounce all the way up here to $10 again, bounce to the 50, $5, all the way up to $11.43 on these. And yeah, I mean, there was definitely some 30-minute crosses in the mix on the weeklies to catch those moves. And yeah, now we're crossing back up, 10s up, 50s up, good looking setup. Just gotta wait for that 30-minute chart to cross. Another one is Reddit. Daily chart. I played this 2 weeks ago, caught a couple 100%, and here we are again, 50 SMA. I'm waiting for the 30-minute chart to cross. If we go to the weeklies, it's somewhere, I don't even know if I have it, but the weeklies are, I think, crossing, but the 50 is down, I believe, when I last checked it. So again, wait for the 30-minute cross on the weeklies for Reddit, and you can grab some longs. It's a really good looking setup. The 10 SMA is down quite a bit, so in this scenario, you gotta wait for that 30-minute chart to cross on the weeklies instead of just buying this 50 dip. I feel like it's better just to wait for the 30-minute chart to cross. So again, Reddit, another good looking setup. That's all I'm going to go over, but I have some others that I'm currently in. That's for the private. I'm not going to share everything for free, but that's just kind of how I play these charts. and use the monthly contracts for the swings. I'm only on like the 4 hour and the daily chart for the monthlies, and then my weeklies I'm looking at all the other time frames. So 30-minute chart will be the main entry point for the weeklies. That's what I'm gauging for the weekly trend, and the overall bigger picture daily chart on the monthlies is what I'm using. So that's what we did on Friday. That's what I'm looking at going into this week. If you guys enjoyed, drop a like, drop a sub, join the Discord if you want to learn. I'm out. Peace.